Hi everyone. So as promised, we're going to start with a problem to get your mind going. And so we'll start with 18-5. I'm going to give you 5 to 7 minutes to go through it and write as much as possible. And I'm going to go around and if you have any questions, help you, okay? Now we have an exam next Monday, even everything is good. We'll have a whole session next Wednesday of review, right? So I'm going to make it structured. I'll have problems to work through. I'll have questions that we want to know how to answer. What material is going to be covered and such. But I still encourage you strongly to bring your questions, okay? And I'll post it in advance so that you see. I'll make sure I'll post it tomorrow. So go through that review, and if you have any questions, bring them on Wednesday, okay? So that you're ready for the exam. Okay, while you're doing this, I'm going to go around with another agenda in mind, but still. How do I go mute? Stanley, how do I mute? Can I mute? I'll just leave it there. Because I'm going with names. What's your name? I think I saw you.
I don't know if I can.
Yes. I think I marked you off. When's the exercise going? I see some of you did it at home, I'm guessing, because you're done. Make sure you sign in. Yeah, Daniel? Alright, so let's see. Was it hard? So what is it asking? We need to calculate the product cost per unit for product C and D. Okay? Any numbers? What did you get for your cost per unit for C? Yeah? Okay, any more numbers?
What was that?
492?
1,492. Yeah, I got 1,000.
Okay. Yes? Okay, we have 1,492. How did you get your 492?
Aren't you asking for the cost per unit for the indirect manufacturing?
Well, can you go through how did you find cost per unit for C? So what did you do?
The allocation rate is $1,500 per setup. The start fee, the 38 setups, 1,500 times 38.
Okay. So 1,500 multiplied by 38, you got 5,700. Okay. 57,000, I'm sorry.
And then add $12 an hour times 1,400 hours.
How much did you get there?
16,800.
16,800. 12 per hour multiplied by 1,400 hours. I'll show you in advance. I'll show you more how it's done. Okay, so in total, then you add it up, right? And you got a total of 73,800. Okay, is it dollars, units? What is it? Dollars. That's our cost, right? Okay, and then what did you do next?
Divide by 150 units.
And then you divide it by 150. How did you get? How did you get the 150?
It says that each unit is 150 units are made.
Okay. So you read carefully. The company plans to manufacture 150 units of each product. That's why you multiplied it by 150. So let me show you what we did. Right? So 1,500 by 38, 57,000. Then we did the same for machine maintenance. We added it up, and then we divided by the number of units for that particular product. The reason why you're doing it because you want just for that C to calculate, right? So when you look here, you have material cost per unit, you have labor cost per unit, right? You have some information, and you have also this also per product. So you somehow need to combine all of it. Okay? And then you divide it by a number of units because you're producing 150, right? Okay. So do you see how it's not 1,400?
It wasn't the question for.
Well, we're not done. Oh, I asked for the cost per unit, right?
Oh, I thought you
We're doing just cost per unit right now. So the next one, we're going to calculate the rest. So for that, what do we need? We just found the cost per unit. Now we have all that information in the table, right? We have direct materials cost per unit, and then we have direct labor cost per unit. Now we know our indirect. Is it? Yes. Okay? So now that we calculated this, we're going to move it here and sum up. Did you meant this number when I was asking for cost per unit, right? Is everyone's calculations correct? Something you can do on the exam? Good. Alright. So the next one, let's try So let's do 18-5, and I'm not gonna have it on the board, so share the book. Because I want you to try solving it. 18-11. So 18-11. So let's try to use ABC to achieve target profit. Okay, if you open the book, 18-11, S 18-11. So in short exercise 18.5, Excel Corporate desires a 25% target profit after covering all costs. So considering the total cost assigned to the product C and D, what would that company have to charge the customer to achieve that profit? So what we want to do, I can display this, I mean it's all there. Everyone got a book? Well, many of you do have a book. You don't have the book? Sorry about that. Well, let's do 2 minutes and then I'll go over it. You know what? It's the same. Okay, so whatever you found, here's the trick. Whatever, if you just saw what we did here, well, we have it here. So this product cost per unit is what you're going to be using there. Okay, so considering the total cost assigned to the product C and D, we want to see what would this company have to charge the customer to achieve the profit, right? And the profit they want is a 25% of the target. So 25% of the target, yeah. So you're going to use these numbers, right? If you look at the book, it's more information there. But for those who do not have it,
it's in size 18-5. That's the information we.
You can use that information.
I mean,
yeah. So if you did the exercise just now, or copied this, or you can look at here. So you'll be using your product cost per unit. You want to manipulate these numbers in some way so that you find what is the 25% profit that they're looking for of the target price. So you need to understand what is the target price here and what is the 25%. It's one line calculation. 2 minutes. Okay? Yep. If you do not understand something, ask questions, because you know work at an exam. I'm not gonna rush today. We're right on time. Ask questions.
So two answers, like one for product C
And one for product B. Yes. Because you did two different calculations, right? This is to derive product C, and this is from D. So what did you get for product C? Again?
373.
How did you get that?
Oh, I just I used the total and multiplied it by 25%. Was that wrong?
It's a little off, yes. We want to take our all costs and then we'll divide it by something. That's your percent. Yeah. Okay, so you take your product cost per unit and you divide it by 100 minus target profit, right? Less target profit. So my target profit was what? 25% we said, right? So it's the same as this number. Right? Can we calculate that? Right. Right? Or
I'm dividing it by
yeah, it's
20.
all the same math. Okay. Right. Did you divide it? Point what? So what is the second number? Seriously, I'm gonna put much harder questions on the exam if we can't do this. It's like putting the calculator in the calculation. Yeah. 67. Okay. So all you really want to do here is to use this product cost per unit, right? And then read it carefully. So if it's my product cost per unit, this is how much it's going to cost me. There's a profit that I want to get, right? And I said that I want it to be at 25%. So what I'm going to do, I'm going to divide it by 0.75, right?
I have a question.
Yes.
If we're trying to get 25%, how come when you calculate, so how come if you were to do 25% of 1492, you don't get the same answer as dividing it by 75%? That make sense?
Say again.
Alright, so if we're trying to get 25%
Uh-huh.
profit from whatever the product cost is at the moment,
Uh-huh.
how come if you multiply it by 25%, you don't get the same answer? You can add it.
Why would you multiply it by 25%?
Okay, so we're looking for 25%, correct?
Yeah.
Alright, so if we did 1492 times 0.25,
Mhm.
which will give you the number of 25% of that product cost,
Yeah.
which you can add to 1492, which should give you 25%, no?
Okay.
It's
Why
a
not?
different number.
That isn't correct. Because 1492 becomes 75%. So if
Exactly.
you want to find that 25%, you have to divide by 3 and then add it. That's why you divide
You're
it.
looking for different. You're dividing here. You're dividing. You're trying to find the. The profit, right? With the profit. So you're taking a percent of different numbers, right? Different percent of the numbers. It's not the same. Like, look at this.
How would we know? Like, is that like the desired profit formula? Isn't that? Like, didn't you give us a desired profit formula, like minus any desired profit?
Minus target profit, desired profit, isn't the same. Is that what you're asking? Why is it
Like
this?
last class we had the formula was target sale price per whatever, and then minus the desired profit, which was the total times percent. Never mind.
No. What is your target?
I was just using the wrong formula. Like, which formula is this? How would we know?
How do you? Why is this the
Yeah,
formula?
how would I have known to minus 100% minus the target profit?
Well, think of it as what you're looking for. So what is it asking? What would you have to charge to achieve that profit? So you have a cost, and then on top of that, you want to have some profit, right? And in sum, all of it should be some price that you want to charge your customer. Right? So that profit that on top of the cost is what you want to be 25%. Right? So you want this number to be your, right, the total cost. Yes. So this is your total cost. And in fact, this is what you are going to charge, right? This in some target traffic and this cost together, right?
So is this cost plus?
What is it called?
Like the cost per unit sold plus it's your target profit?
Yes, right?
Yeah. So is there a
So
different way you can do this? Or is
you
this
can do it any way you want. You can say, okay, so you can do like a math problem. In fact, the majority of your managerial problems is your math, is your simplest math. So I'm really surprised. All it is, you're saying, okay, my profit, I want it to be 12%.
Right.
You're gonna say, my profit is what's gonna be my 25%. What does it mean? It means my cost is gonna be 75%.
Because there's a 100% sold.
Right?
Mhm.
I mean,
Of the total cost?
yeah.
Mhm.
Right? Do you understand this?
I understand.
And that's math. That's all it is. So in sum, you want all of it, 20%. How you want to calculate this 25% is up to you. If you want to, I don't know, whatever you want to do, as long as you get the number. Okay? Do you have a question? Yeah? All right.
1811.
Okay. So just in time, let's go through just in time. We talked the other class about just in time. What does it mean? In general, your just in time, just think of it what it's saying. Describe a just in time production. So it's a production where I have every part of it sync with the process of producing that product. Okay? So what does it mean? What does it mean to us? It means when I'm producing that product, all of the components are delivered just in time. My inventory is practically at minimum. Now, for me to be successful, I have to have a couple things done there. Okay, so what are they going to be? I need my deliveries to be very small and frequent, but most of all, I need them to be reliable. Okay, so all my suppliers need to guarantee not only that they're going to deliver on time, but that I'm going to have zero defect. Okay, so that my production would not stop. Okay, so my finished goods inventories are kept to the very minimum. Then my also costs, therefore, are going to be also reduced to minimum. Why is it so? Because even though I have frequent deliveries, I don't have the cost of keeping inventory, which is renting, which is salaries, and so on and so forth, which is much higher than the deliveries. Okay, cost for deliveries. Okay. Obviously, it minimizes your investment in inventory, right? Oh, it's not doing that. And then also, one of the major and appealing to managers factors is that you don't really have unsellable or obsolete inventory. Okay, that's very important. Because once you're producing, you acquire those costs, you want to move that cost to cost of goods sold and not keep them on the books. Okay. So one of the major characteristics here is your work cell. What is a work cell? It's a, just think of it as one designated area where all of your components of productions are delivered, okay? And all of just that designated areas where your cross-trained employees are working on that particular product. So it's really a work cell with different deliveries coming in, okay, and out. So what do we have here? It's an area where all resources are readily available. So we don't really have a designated inventory. It's not really there. We have some limited, very minimum storage, and that's it, okay? Then our employees are working under very minimum supervision, plus they are cross-trained usually. So my employees are working right there in the work cell, and we don't need to supervise them. They're responsible for the quality of that product, and they can replace each other. They're cross-trained. Okay, we have this very efficient cell, work cell. Another important point here is that our goods are produced in small batches, okay, and that also ensures the quality. So so those employees are not only monitoring per se, they're also monitoring in much smaller batches, which are manageable, right? Easy to make sure that they're delivered with quality and on time. And I have a very well-developed system where once my materials are out of this work cell, I have other deliveries coming in. So it's a non-stop process. When we're talking about just-in-time process, let's think how is it different from the traditional system. In traditional system, I have some scheduled deliveries, right? At the beginning of the month, I have this much coming in. At the end of the month, I have this much coming in. I'm not really relying it that closely to the production. Okay, so in my traditional system, I have an inventory. From that inventory, I'm transporting whatever I need to my production line, and once I'm done on that production line with a certain component of that product, I'm going to transfer it out to another line, and so on and so forth. Okay, it's not as unified as a work cell. Plus, I do have an inventory, and when it expires, I'm losing, right? Okay, so I have to move my work between departments, right? I'll waste my time, my money, not good. So let's see at this picture. So this is an illustration for a just-in-time production system. As you can see, it's quite simple, right? What do I have? I have a work cell that is composed of a number of workers, and then I have some raw materials coming in, finished goods coming out. That's pretty much it. Very simple, very well illustrated here. Okay, so what do I usually do within this work cell? It's materials handling, it's assembly, it's quality control, all of it is there. All of the processes are completed within the work cell. And as you see, I don't really have any departments, right? There are no departments. Okay, but all sounds really good. There are obviously some things that need to be accounted for, and mainly it's the potential problems with deliveries. Okay, so first, if I do not have that material delivered right on time, it's a problem, right? I can lose my sales, I can lose a whole contract. It potentially can be very harmful to the business. Another is the quality, right? Like we said, that we should have almost negligible number of units that are of low quality of the raw material coming in. Okay, so I need to have I need to have it almost guaranteed by my vendors. So second one of quality materials essential. Cool. Yeah. Okay. So some just-in-time companies have small inventories that are of critical materials. So why do they do that? So that they do not stop the process. So let's say I'm producing something that requires the majority of that product to be of zero low quality. Okay, all of it should be of the high quality raw material. In this case, I cannot have this negligence of allowing a vendor once in a while have the material delivered of low quality. So what I'm gonna do, I'm gonna have a little bit of the inventory. So what is it gonna do to me? It will add some cost to my production. Okay? Okay. Can you give me some examples of companies that might be doing this? Just-in-time production?
Food.
Might be. Something bigger. More expensive. Yeah. You have something, Mark? No?
Oh, cars.
Yachts. Okay. That's a good one. So with things like Toyota is famous for actually developing it to the point where it's state of the art. So Toyota, and another one I think is Dell. Right? All right. So let's go through costing. This is the part that we're most interested in. Okay? Okay, so we need to simplify accounting as much as possible in such environment because we have this close-knit cell that we don't have much going on outside of the cell, right? So our accounting is going to be quite simplified. Okay, so sometimes they call it backflush costing, as you see right on top, because why do you think is it so? Why would it be called backflush? Especially those who read the book might know that. You guys. Because it seems like it's working backwards. So why does it seem so? So we start with what? We usually start, we'll compare it in a second, traditional to just-in-time. But let's just think about it for a second. So we start with the output that has been completed. Okay, well that's odd, right? Then we're going to assign some manufacturing costs to units sold and then to inventories and so on and so forth. So three major differences between the traditional and just-in-time. So I have traditional on the left, just-in-time on the right. So we record production activity in traditional when we build costs as products move through three inventory accounts. Okay. Now with just-in-time, it's different. We're only going to record costs when units are completed. And why is it so? Because it's a work cell, right? Everything is happening within just one work cell versus my costs, right? Build costs as products move through three inventory accounts for traditional. Because I have all these different departments and different accountable processes and so on and so forth, right? With work and sell, just in time, it's just one unit. Now let's look at the inventory accounts. What is different with the inventory accounts? We have our materials, inventory, work in process, and finished goods. Okay, just like we just talked about it. And now in my just-in-time, my inventory accounts are raw, and then process inventory, and then finished goods. Okay? So raw and in-process inventory and finished goods. Do you see how different it is? Right? So you remember how we had it last classes, we had materials inventory, some costs, and then we had those costs moved to work in process and so on and so forth, right? Have that illustration in mind. And here we have raw and in-process inventory, how we have all the products coming in, and then finished goods, we're done. They're flowing out, right? So picture that. That's going to be your one, and that's going to be your second. Okay, and then the last one. So what are the manufacturing costs? Gone through this, right? In traditional, what do we have? Direct materials, direct labor, manufacturing overhead. You should dream about this already. We've said it so many times. But for just in time, we have direct materials and then conversion costs. Okay? So direct materials, conversion costs.
I have a question.
Yes.
How are conversion costs different? Oh, excuse me. How are conversion costs different than manufacturing overhead?
Well, we've talked about conversion costs, right? What do you think in just in time is the conversion cost? What do you think it is?
How do you get the raw material to the finished good?
Yeah, it's whatever cost you acquired to convert something from raw material to the product, finished product.
And that could be
right?
direct materials and direct labor?
Your direct materials are going to be just direct materials. Your conversion costs are going to be your cost for that labor that converted that raw material into the product.
Okay.
And then whatever was the manufacturing over. That's right. Okay? So it's much simpler. Again, it's simpler. You don't have to deal with the manufacturing overhead that we had before. Okay? Because you have just one cell, everything is happening there, and because we're doing small batches, it's really easy for me to understand what costs are for this batch, even to that point, right? Is that clear? Yeah? Okay, so let's look here. Let's go back to the Smart Touch. So we're making DVDs, just to remind you. So you remember how we just talked that just in time does not separate work in process, right? Inventory account. So we don't really have that. So we're going to use two inventory accounts. What are those? Raw and in process inventory, right? And then finished goods inventory. Do you remember how we mentioned it here? Inventory accounts. Okay, so what does it tell us? When we don't have the work in process, there are some things that they're kind of odd for us, right? What are we not tracking? So while we're manufacturing something, we're not quite tracking any costs, right? We were able to do that before, we're not doing it here, but do we need it? We don't actually need it either, right? So what do we have here? We have, let's look, we have our direct materials purchased, right, in the raw and in process inventory, and then we have our conversion costs, right? So we start with the two accounts, raw and process inventory and conversion costs, okay? And then our costs are gonna be right here in finished goods inventory once we're done with the product. So usually right about here, we'll see the work in process, not anymore. That means the problem in the exam on the JIT would be easier than the other one. So once we're done with the finished goods inventory, when we sold that product, I have another account and it's called cost of goods sold. Same thing, right? So if we were to talk about Smart Touch, we can travel that cost. So we purchase some materials, right? And then we apply some costs here. And then that cost is right here in my finished goods inventory. So once I'm done with making those DVDs, right? Writing the DVD, putting it in the sleeve, and then in the case, and whatever needs to be done by the time the product is done and it's ready for the customer, we have finished goods inventory, right? And then once I sold those DVDs, that's where I have that cost, right? In goods sold.
So where does that number 5 come from? Off of conversion costs and the cost of goods sold.
Right? That's usually something that's noted as a as the answer. Okay, so you can look at it as this is going to happen, and then this is going to happen, and then I'm going to put this, and then that, and that. But in fact, it's usually actually written out what it is. It's probably in the book written out what is 1, what is 2, what is 3. It's a reference.
Okay.
Yeah? Okay. So let's do, I don't have answers here, that's good. Okay, so let's look at the exercise and try to see if we understand which one is JIT and which one is traditional. I'm so tempted to call your names and see if you understand, but I'm not going to do the second grade thing. So let's read the problem. Consider the following characteristics of either a JIT production system or a traditional product production system. So A, products are produced in large batches.
Traditional.
Why is it traditional?
JIT is small batches.
Oh, alright. Large stocks of finished goods. Ooh, hold on. Yay. Okay. Large stocks of finished goods protect against lost sales if customer demand is higher than expected. Why would it be traditional?
Again, large stocks.
Because it says large stocks. Cool. Okay. And the reading of the whole thing. Let's see. Yay. Okay. Suppliers make frequent deliveries of small quantities of raw materials. Right. Employees do a variety of jobs, including maintenance and setups, as well as operating machines. You sure?
Just
J-
employees
J-
do.
Right.
Who's for traditional?
I said just
Who is JIT? Okay, what those who did not raise the hand? So, last word, JIT or traditional?
JIT.
JIT. Hey.
Yes, it's just in time. Let's read why. Employees do a variety of jobs. Do you remember how I said they're cross-trained?
Yes.
Yeah, including maintenance and setups as well as operating machines. Okay, and the last one. Oh yeah, that's it. Sorry. We've done that.
Are there any questions like this in the test?
Well, think of that as a multiple choice, right? So you might have, you know, a setup, and then it's going to have multiple choice of A, B, C, D, right?
Cool.
Look at this. I'm not done with the exam, so I can't tell you, but by Wednesday I'll have the exam.
Mm-hmm.
But I'm still not going to tell you, but I'll have that.
Thanks.
Okay, so let's do this. Machines are grouped into self-contained production cells or production lines.
JIT.
Who is for JIT? Who is for traditional? Are you asleep there in the back? Traditional or JIT? Machines are grouped into self-contained production cells or production lines. Self-contained production, even if you call it lines. Right? Okay. Machines are grouped according to function. For example, all cutting machines are located in one area.
That's
Traditional.
Okay. Got that? No? Yay. Okay. The final operation in the production sequence pulls parts from the preceding operation. The final operation in the production sequence pulls parts from the preceding operation. Yeah, look at this word pulls. Any ideas? I mean, you have a 50-50 chance
I
of
said
getting it right.
traditional. For me, it's traditional.
Tradition.
JIT, why is it JIT?
The final operation in the production sequence.
Let's see if you're right.
Hey.
Good job. All right. Each employee is responsible for inspecting his or her own work.
JIT.
That's clear.
Good. Management works with suppliers to ensure direct free raw materials. What is it?
JIT, that's just in time. Management works with suppliers to ensure defect free.
Defect free. What did I say? Did I say something
Just in
different? Sorry.
time. It's just in time. For me, it's just
Yay.
in time.
All right. So I think you'll do good on these questions. Let's see next. So we're gonna do the fourth. The objective is to use the 4 types of quality costs to make decisions. Okay. So different types of costs. At the end, what we need to do is derive the right decision for the business. Okay. So the first thing that we want to learn is the total quality management. Okay, what is it? It's such an important part of JIT because you have a very limited inventory. You have to have total quality management in place. Okay? Your companies are much more, if the company has JIT in place, the company is very vulnerable to this limited stock of vital items, right? Like we said, some are even keeping the most important parts in stock to the limited amount, but they do. So, okay. So if my production, because something was delivered at a low quality, had to shut down, or let's say, I don't know, my direct material defect is such a big defect that I can no longer keep production going. My company is very vulnerable in this situation, right? So I want to make sure it is to the minimum, okay? So my critical element here is defect-free direct material. So how can I resolve it? Again, total quality management is such an important part of it. Because if I monitor those activities and improve quality and eliminate these defects, right, and waste, then my company would not shut down, my production line would not shut down, right? My cell would still be operating. Okay, so to meet this challenge, each company implements total quality management. And obviously the goal of total quality management is make sure that the quality is at continuous improvement. That is its goal, okay? Defect-free, high quality. So they input many different controls and monitor the process very closely. Mainly what it is I'm thinking about the example already. Let's keep going. So our well-designed products reduce reduce inspections, rework, warranty claims. We all understand this, right? So, but how do I design the system? Let's look into that. So I can do that if I inspect these 4 types of quality costs. Okay, so where am I acquiring the most costs? So I have some prevention costs, right? What are they? When I do everything to avoid my poor quality goods or services, right? So it's my prevention cost. That's all